far from the central place where Mascara is being celebrated. It's a place where it's far from the traffic, but it's really great here.
You got me feeling like I must be dreaming. You got me feeling like I'm on the ceiling. I can't believe my eyes. You make me come alive. You got me feeling like I must be dreaming.
Saludad gave us the perfect place for the family, and we're very, very happy for that.
And there is a lot of fun things here.
Holding on to what I need. Because of you I finally see straight away. I feel alive. I'm letting go. There's nothing
So here,
left to.
you get to have the same experience of Mascara with all the dances and all the food without worrying about traffic and people that are constantly bumping you while you walk around.
You got me feeling like I must be dreaming. You got me feeling like I'm on the ceiling. I can't believe my eyes. You make me come alive. You got me feeling like I must be dreaming.
I love going to places like this where there's something for the kids, there's something for us parents, and something for the whole family. It's one big hub where you can, eat, dine, enjoy, and also the kids have something to do while us adults do our own thing as well.
Hi, we are live here doing Sip and Paint. So we're celebrating Mascara Festival, have fun, and just chill. Just a laid-back activity like watercolor painting. Yeah, so that's it. So we would like to thank Saludad, PHINMA Properties for inviting us, for having us here tonight, celebrating Mascara 2025. Bye!
At PHINMA Education, our mission drives our business. We work with our students, fellow educators, colleagues, and partners towards a better future, where every student is able to uplift themselves, their families, and their communities, where we are part of a global movement to better the lives of those who need it most, where our healthy returns allow us to expand quality education to reach even more students. From establishing accessible schools for underserved youth in the Philippines, and now the rest of Southeast Asia, to customizing our learning strategies to our students' needs, aspirations, and resources. To ensuring sustainable operations across our campuses. This is the business of making lives better through education.
Hi, everyone. Thank you for joining us this afternoon for PHINMA Corp's first quarter 2026 investor briefing. So I'm Cara Albert, the Investor Relations Officer and today's moderator. Joining me today, we have a fresh face, Ms. Grace Purisima, the Assistant Treasurer, Ms. Nanette Villalobos, VP and Treasurer, and of course, Mr. EJ Kwak Hansen, our CFO. And the four of us will be the speakers in today's session. Before we get into the presentation proper, allow me to just go over a few reminders to ensure that we have a smooth session. So first, we'd appreciate if you could kindly double check that your microphones are on mute during the main presentation. We will be having a Q&A session at the end where you may raise any questions that you might have. And depending on your preference, you can choose to raise it through the Q&A button, the chat box, or by using the raise hand function in Zoom. Please also note that we will be recording this briefing for uploading to our website. So with that, I'd like to turn over the floor to EJ.
Okay, thank you, Cara, and good afternoon, everyone. Thanks for joining us today for the first quarterly analyst briefing of 2026. I guess before we go on to 2026, though, I do want to touch on 2025 once again. For 2025, as everyone knows, it was a challenging year, not just for the Philippines, but for PHINMA in particular. But we remain anchored on our longer-term strategy. We do apologize for the results of last year. We own those results, but we are moving forward, and we do think that the businesses we're in are really the businesses that provide the essentials for Filipinos. So when we talk about growth on a PHINMA perspective, it also leads to the impact that we want to see. The more we can grow our businesses, the more we can help Filipinos get the essentials of dignified lives. We have that, of course, in education through PHINMA Education, in our construction materials group, which includes our steel roofing and cladding business, our cement business, our solar business, and our new insulated panels business. In properties, we have that through PHINMA Properties and our newer segment, PHINMA Community Housing, which focuses on socialized housing solutions for minimum wage workers. And of course, in hospitality through the management, franchising, and ownership of hotels. So my colleagues and I will walk you through the first quarter for our businesses, but more than just the first quarter, we also want to show you what these businesses will look like moving forward. Next slide, please. So I mentioned our strategy was to focus on underserved markets. These are the markets that we think other businesses are not really focusing on. And these are the business segments, these are the customers who we really need to reach for the Philippines to become the country that we envision it becoming. So how do we do this? We start, of course, with our people. Beyond our leaders, it's also going across the organization. And that's why I'm very happy to have with me today the three ladies that are here. It's the talented individuals, the mission-driven ones that we have in PHINMA that work together to make these results possible. Without them, we wouldn't have the success that we do. And without them, we wouldn't be able to make the impact that we do. It helps drive us, and I hope that the results that we have do their hard work justice. Second, it's really making sure that we're as close to the markets as we can be, that we know our customers as well as we can. And again, across our businesses, how can we leverage synergy? And synergy for us isn't just the traditional synergy of, one business buying from another. Synergy is also in terms of sharing knowledge. For example, community housing, which we set up last year, it's the same market segment as our PHINMA education. So we're able to share insights, not just from PHINMA education to community housing, but from community housing back to education so that both businesses can evolve to meet the market dynamics. So as I said, we do this by understanding our customers. We do make sure that in the business segments that we're operating in, we have experts with extensive industry knowledge. I'm very happy to say that in April, PHINMA Corp deepened our leadership bench through the appointment of 3 new vice presidents. Ray Cervera, who's concurrently the president and CEO of Union Galvez Steel Corporation, Daniel Del Rosario, concurrently the CEO of Union Insulated Panels and PHINMA Solar, and Nika Cueto Mamites, who's our VP for Corporate Services and Planning, as well as our Chief Risk Officer. So having this wider leadership bench, along with the strong people that I mentioned, and the strategic partners we're able to bring in, are really what's going to drive our business forward in the future. Next slide, please. So the last point that I didn't mention in the last slide was really the diversified geographic reach, and you can see this in this chart here. For the past few years, the PHINMA Group has been talking about being on a growth footing. What that's meant for us has been about 8 billion pesos in capex, with an anticipation of about another 6 billion pesos coming in this year. And you'll see these projects nationwide. Starting with PHINMA Education, they continue to put up new campuses, as well as acquire new schools. In fact, the most recent acquisition they had was just in the first quarter, which was Southeastern College in Pasay. When you combine it with Southwestern University, I think that means we have a good hold on the South. But we really do intend to be nationwide. In terms of our construction materials segment, we've been expanding also largely in Mindanao for cement. You'll see here that PhilCement is putting up their Panaba terminal, which will begin commercial operations this year. It also has its Tubonco terminal, and in Zamboanga del Norte, the Petra plant in Dipolog. We also have put up and will also begin commercial operations this year, the insulated panels plant in Porac, whereas in Union Galvez Steel, we're really looking at different asset-light strategies that we can employ. For property, they've driven our expansion into the Bacolod market with their Soledad Township, where we're also putting up the first branch of Southwestern University outside of Cebu. We're also putting up a trip hotel to support the development of that township, and as well as a community housing development in Bacolod. Our first Coho site is in Davao, where we're also putting up the first full franchise condotel in the group, Trip in Samal Island. Next slide, please. So I did say that our results were a bit challenged in 2025. I'm happy to say that the first quarter of this year represented a strong turnaround, despite the market volatility that's happening. This was led by PHINMA Education, which continued to have record enrollment, a 12% year-on-year, which subsequently drove its revenues to 2.3 billion pesos, and net income to more than 1.1 billion pesos in the period. Our construction materials group, you'll notice that there was a reduction in revenues, but the net income loss was actually a bit lower than the previous year. Let me go a little bit further into this number. I think with the events happening in the war, as well as the lingering effects of the flood control project, it really did hamper in the first quarter the growth of the construction materials segment. There was still continues to be a slowdown in government projects, even if funds are available. I think we do need to push the government to release these funds to implement good projects to stave off the potential impacts of stagflation in this country. This is infrastructure that is vital to our nation, and this will also generate employment. But we were able to manage our margins well. And despite what was happening globally, actually in March, both our cement and steel roofing businesses were able to increase prices, which strengthened their margins. On a consolidated basis, our margins moved up from about 32% to 37% year on year. Now, in the property and hospitality segment, yes, that continues to be a challenge. Our property segment in particular continues to suffer from, I guess, the overhang of demand in Metro Manila. But I'm happy to note that we did start our transition to the provinces, as I mentioned, with Bacolod. That provides a very strong and positive base moving forward, while we also see strength in cash generation from that business. Meanwhile, in hospitality, they did begin to recover, and I think Kyra will tell us a little bit more about that later on. So with that overview, I'll turn it over to Nanette for a deeper discussion on our financial performance.
Thank you so much, EG. So building on the business unit's performance as discussed by EG, let me now walk you through how this translates to our consolidated results for the first quarter. PHINMA Corporation had a good start to the year. Our net income attributable to parent has more than doubled to 407 million year on year. And if you look at our operating income, it has also improved by 9%. This despite the lower revenues registered in the first quarter amidst the really challenging market environment that we have. The results were primarily driven by the solid performance of PHINMA Education, and it was also supported by earnings made by PHINMA Solar as well as our hospitality segment. The results were further reinforced with the ongoing group's cost management initiatives. If we move on to the next slide, we can also see that our financial position has improved. We ended quarter one with cash and cash equivalent of about 4.3 billion. And this was largely attributable to the receipt of the equity infusion by Sumitomo Osaka Cement to PhilCement. Now, if you look at our assets, it has rose to 61 billion, coming from 59 billion as of year-end 2025. And this is largely attributable to the Southeastern acquisition, which is the newest addition to our education network. In addition, there are also ongoing investments of PhilCement in our Panabo terminal, as well as the acquisition of land and equipment for our union insulated panel. Our leverage remains well managed with our DE ratio at 1.67, and our debt cover is actually strong at more than 7 times for the first quarter. So you will note here also that total equity increased to 18.6 billion. That's roughly about 2 billion increase from last year. And this is largely due to the issuance of shares to Sumitomo, combined with the net income during the quarter, as well as the acquisition of Southeastern College. Overall, we are well positioned to continue supporting the growth initiatives of our SBUs, supported by our expanded capital base and our strategic partnership. Let me now move on to our first SBU, PHINMA Education, which continues to demonstrate consistent and scalable growth. For over 2 decades now, we have sustained enrollment growth in fact, for our school year 2025 to 26, we were able to serve about 178,000 students. And this is really a record enrollment across Philippines and Indonesia. Importantly, this is not just a scale, but outcomes. Our students have delivered a 93% overall passing rate across 20 licensure programs in the Philippines, reinforcing the quality and relevance of our education model. In the next slide, so we continue to expand our footprint. In March, we added another school in our network with the acquisition of Southeastern College. This becomes our 12th school in the Philippines and 14th, including Indonesia. And this will be integrated into the PHINMA St. Jude College network within the National Capital Region alongside our existing campuses in Manila and Quezon City. Strategically, this strengthens our presence in southern Metro Manila and nearby growth areas, allowing us to serve a significantly larger students base of about 18,000 students across this corridor, including parts of Laguna and Cavite. Next slide. The strong enrollment resulted in education's consolidated revenues of 2.34 billion and net income attributable to PHN of 633 million during the quarter. Overall, education continues to be a core earnings pillar of the group, providing both growth and stability in our portfolio. I shall turn over the floor now to EJ to discuss our construction materials segment.
Okay, thank you, Nanette. As Nanette mentioned, our education business does give us a good, stable basis of growth, particularly net income from a portfolio level. Our construction materials segment, on the other hand, is our largest driver of revenue growth. But of course, it's been hit by, as I mentioned earlier, the flood control controversy. We do expect government spending to recover in the second half of this year, really to jumpstart the economy as it's needed. But we also saw the impacts of the Iran war in terms of our logistics cost, in terms of our supply chain. We've been able to manage these pretty well, and to a large extent, as I mentioned earlier, protect our margins while also increasing volume, particularly in the month of March. So we're entering the highest demand season for construction materials, so we do expect that to be a strength moving forward as long as we continue to navigate these various headwinds. I did mention that we're expanding our presence largely in the Mindanao market. This is a market that we think, one, has more demand, but two, also less supply. And we continue to retain some brand name recognition in that market that we think makes us very competitive. We have the right local partners there in the Florenda family, who are one of the largest business groups in Mindanao. They know that market well, so between the two of us, we're able to really navigate it and supply our high-quality construction materials equipment. Now, in terms of our sales mix, particularly Indian galvanized steel, we've been shifting towards higher margin product segments. One example of this has been our foray into insulated panels, which really was a business that developed out of UGC. Once we were able to see the market opportunity in insulated panels, especially as other conglomerates are going hard into the cold storage space, we thought it made sense to expand it and spin it off as its own business, put up a state-of-the-art manufacturing facility, and really grow that. It's a business that did well last year, and we continue to see positive sights this year. So UGC has done a great job of incubating other businesses within the PHINMA group. We continue to manage its costs well. We have more than 25 sites nationwide, which allow us to be close to our customers. And that closeness to customers in UGC and PhilCement has also benefited us in the recent crisis. Customers have been looking and moving towards suppliers who are close to them. So in terms of the overall sales strategies that we're doing, we've really defined it and refined it. As I mentioned earlier, we have appointed 2 new CEOs to this business because, again, the growth opportunities in the construction material segment are vast, and we want to be able to take advantage of that. So we thought that focused management teams would be able to take advantage. Of course, as Nanette mentioned, we were very grateful to receive the investment of Sumitomo Osaka Cement in January. That really will help strengthen the balance sheet of PhilCement. But more than that, it provides us access to a valued strategic partner, a partner that we've worked with in our initial foray into cement a few decades ago, as well as, of course, a sign of support that the industry does need more investment. If you look at cement consumption nationwide, on a per capita basis, it's really half of our competitor countries. And when you put this in the context of an archipelago that needs ports in every island, we think there should really be a lot more spending in the cement space. Of course, what we've seen over the past few years is that while there was spending in terms of the budget, that wasn't going to actual construction. So again, we're urging more real spending in construction. Next slide, please. Okay, so I largely talked about all of these in the last slides. Let me focus now on PHINMA Solar on the bottom. Of course, with energy prices going up and we continue to see the strains of our energy infrastructure, there has been growing demand for solar solutions. In PHINMA Solar, what we really focus on is leveraging the synergy with UGC on commercial-sized rooftop developments. Of course, we're also developing our rooftop solar segment in the government's JEA project, and we expect those to continue to drive us moving forward. The demand that we saw in the first quarter, we're probably going to start recognizing revenue from that in the third quarter of this year. As mentioned, our insulated panels plant in Porac will be completed soon, and commercial operations will begin in the second half. And we're very happy to see it. Our engineers from abroad have come in and are helping us put the finishing touches on that. Of course, in terms of Phil Cement and UGC, I've talked about those extensively in the previous slides. Next slide, please. So I did also mention earlier how revenues are down year on year, but I think March gives us a lot of confidence. But what was really driving March was the continuation of ongoing projects. To be fully transparent, we will see if companies continue to launch new projects in the future, but we expect that demand to be replaced with government demand. So with that, I'll turn it over to Grace to talk about our property development.
Thank you, EJ. For our property business, we continue to strategically focus outside Metro Manila in response to the oversupply situation. Next slide, please.
Sorry, we're just keeping everyone in suspense.
So we have pivoted our developments to high-growth regional markets such as Batangas, Cebu, Davao, and Bacolod. As you may know, a key milestone for us is the continued rollout of Saludad Township in Bacolod, our first township development. Saludad is strategically located in what we anticipate will become the emerging city center of Bacolod, with the project driving the narrative of Bacolod North as the next growth corridor. And this Bacolod North branding was also officially adopted by the LGU permission to differentiate the district. We're also further reinforcing our commitment by establishing a branch of Southwestern University, as mentioned by EJ earlier, and our third Trip Hotel as the township's activators, which has in fact given us a boost in sales, especially in the MRB space. We've also achieved important milestones, including the groundbreaking of Trip Hotel last March and the start of construction for the Maayo Terraces Saludad, our first mid-rise residential development within the township. Next slide, please. For the first quarter of 2026, PHINMA Properties recorded revenues of 338 million and a net loss of 230 million. Lower revenue is primarily driven by a lower percentage of completion, or POC, as we continue to adopt a cash generation strategy, which further improved collections while balancing revenue recognition alongside the resumption of construction activities. Looking ahead, while the pivot toward regional developments will take time to be fully reflected in our business results, we expect improved revenue recognition as construction activities commence for Saludad's residential development. So with that, let me now turn you over to Kara.
Sorry, just to build on the last comment of Grace. I think we mentioned it in previous investor briefings last year that we did start to see the Metro Manila market to be oversupplied. As a result, we shifted our focus from further developing existing projects in Metro Manila towards developing this project in Bacolod. We expect the revenue that replaces that foregone revenue to start kicking in later this year, but really more next year and moving forward. So that once that revenue starts coming in, that's when we'll start to see a restoration of the profitability of PHINMA properties. Karen?
So I'll talk about PHINMA Community Housing, which is the youngest SBU among the portfolio. It was just started last year and really aims to tackle the significant housing backlog in the socialized housing segment. What you see on the left-hand side are actual photos of the exterior and interior of the model units, which is in the Davao site. Speaking of this site, the team broke ground in what we call PHINMA Tatag Davao last November 2025, and we are targeting to start the bulk of the construction works by the second half of this year. And hopefully, once we get the ball rolling in Davao, we can also start on the Bacolod project. As mentioned in previous briefings, we want to really underscore that what makes PHINMA Community Housing different, or PHINMA COHO, is really the focus in making it a community. And to do so, we want to ensure that the facilities fit the needs of the residents there. So for example, we want to put a daycare and a skills upgrading facility or a community-based enterprise facility so that the people who live there can upskill and basically uplift themselves. And given the strong alignment of this venture with the overall mission of PHINMA Corp, PHN is putting in 250 million into this project. So I'll now move on to PHINMA Hospitality. So like EJ touched on in the first part, PHINMA Hospitality also has several expansion projects in the works, basically to bolster its nationwide presence. In NCR, we are expanding the existing Microtel Mall of Asia branch by adding 100 rooms to the existing 150. And this is a property that's really been performing well over the past years, given its close proximity to the mall and to the event spaces in that area. And increasing that room capacity will allow us to better leverage on the location and will better position us to serve the growing demand in the area, especially once the Pasay 360 project is completed. Then in Bacolod, as mentioned by Grace earlier, we are putting up a trip by Wyndham in the Soledad Township. The groundbreaking for that was held just last March, as you can see in the photo in the upper right. And we expect that this will be a great addition to the township project and underscores the group's drive towards regional development, given that we're not just putting up the township, we're also putting up a hotel that will be there. Then lastly, we have Trip Sama with our longtime partner, the Mosaland. This is the group's third franchise with the Mosaland, the first two being Microtel Davao and Microtel Gensan. So we're looking forward to the success of this third project with them. Now, as of the first quarter of this year, we saw stronger hotel revenue generation across multiple properties, which effectively offset an anticipated revenue decline in Microtel Mall of Asia, which, as mentioned earlier, is still undergoing construction works. Trip Mall of Asia in particular has really seen stronger online bookings and has been able to leverage on a lot of event-driven demand from various weekend activities in the Mall of Asia. These activities are like the fireworks competition, the various concerts we've had throughout the year. And so that's why you'll see an improvement in the first 3 months of 2026 versus the financial performance in the same period last year. Now I'll give the floor back to EJ to give the overview.
Okay. Yeah, thank you, ladies. I guess rather than going through everything that we've already discussed, let me talk a little bit about some of our focus areas for the rest of the year. As mentioned, we do remain anchored to our long-term strategy of growing our businesses, but I think specifically what we're focusing on this year is really driving the execution of those plans. As you could see in the earlier slide, we have expansion projects nationwide. These expansion projects really require very, very focused and determined execution to make sure that they come on stream on budget, and that they're able to provide the products and services that we intend to, again, to the communities that we intend to provide them to. Secondly, looking at increased volatility. We're managing our interest rates exposure. We're looking at how we can handle our debt, reduce it in areas that we can. We're bringing in equity like we did in PhilCement to bolster those balance sheets. We want to see these projects also, again, generating cash flow to repay the capital to the companies that we're investing in it. But also beyond that, we're monitoring risk on a group-wide basis. When the incident and the war in Iran began, we did an exercise to really stress test the impacts of the war over prolonged and severe scenarios to see the impacts that they would have on our group in terms of our cash flow, in terms of our operations, in terms of our balance sheets. And we've moved quickly to strengthen areas that we think need strengthening, to address the vulnerabilities we think need addressing as well. And at the same time, where there are areas of opportunity, we're willing to move fast to make sure that we can take advantage of those opportunities. So that's really how we're doing things as a group. We're optimistic about the future, but we're mindful of the risks that are present, and we continue to build our business together with the right people and the right leadership in place. And thank you again. And I think we have Q&A next, right, Kara?
Yes. So we'll now open the floor to any questions. Again, please feel free to use the Q&A button. If it's not showing in your menu bar, it might be hidden under more. In case you're having difficulty with the Q&A, you can use the chat box, or alternatively, you can raise your hand. Let me check if there are any questions that have been sent in. Okay. So we'll start off with a question here. So first, has the US-Iran war affected any of the group's growth or expansion plans? EJ, you want to take this one?
I was going to ask Annette to no. Of course it has, right? When these scenarios happen, you have to relook at the business case and make sure that they still make sense. For example, your cost inputs go up, our interest rates have gone up very quickly, so even our cost of funding these projects has come up quite significantly in a very short time span. So we've relooked at these. We're continuing to push the projects that we think make sense in this environment. But we've also tightened up operations. We've cut back on non-necessary spending. Even just small things like, for example, our offices, we close them on Fridays to save a little bit on overhead. We've encouraged our employees to work from home more, to also save them the burden of increased transportation costs. And so these are the kinds of small things, but also the larger strategic things that we've done in light of the war. We continue to keep a close lookout. Our treasury team on a weekly basis will look at the latest outlooks, the impacts, how it impacts not just interest rates, but foreign exchange. Where we can, we've hedged our exposures. And I think we have reined in on some of the spending as well. Nanette, I don't know if you want to add.
Yeah, and to add to that, the respective business risk teams of our SBUs have been really closely coordinating and collaborating to ensure that the mitigating measures are really in place and are really ready and available anytime.
Thanks, EJ. Thanks, Ms. Nanette. We have another question.
36% reduction. Okay, there's a question.
Okay, I think it's color on the reduction of cost of sales from John. John, if we go back to one of the earlier slides, there was also a corresponding reduction in the revenue, namely in our construction materials group, as our sales did go down a little bit year on year. But on the other hand, stronger pricing and cost management has actually improved our gross margins on a consolidated basis by about 5% year on year. And that's why we actually have stronger profitability this year versus last.
There's a second part to the question. On hospitality, how had foreign visits trended in first quarter 2026? Are you seeing effects already from the visa-free travels from Chinese tourists this year? Well, as of the first quarter, actually, most of the guests, especially in the MOA area, have really been domestic. I think more than half, if I'm not mistaken. So it's really still domestically driven demand, either from the domestic leisure segment or from corporate accounts in the domestic space.
That's another segment where, again, the long-term fundamentals make us bullish. If you look at our tourism, we're just getting back to 2019 levels, which are still far below our Asian peers. So it's an area of opportunity for the Philippines. And I think the fact that, for example, our airports are vastly improved now versus a year ago, those are the elements that would make tourism more attractive. And as we continue to build that tourism infrastructure, that'll drive more towards our hotels.
I hope that answered your question, Liam. We'll move on to another question that was sent. Do you see UIPC becoming a strong growth driver for the group, and why? Do you want to take that one, EJ?
Sure. Yes, I do think it's a strong growth driver. There are a couple of reasons, right? UIPC's main target segment is cold storage. And this is really our direct response to the food security crisis in the Philippines. It's a sad fact that we, one, don't generate enough food on our own, but secondly, within our supply chain, we lose a significant portion to it because of climate, because of storage. And so cold storage is an opportunity for us to reduce wastage. UIPC's insulated panels can improve energy efficiency by more than 20%, depending on the sites. And so this will extend the life again and reduce the wastage. But secondly, it will also result in savings for our buyers. Now, why go into cold storage this way versus going into cold storage on its own? Cold storage on its own is a very capital-intensive business. The logistics are a significant driver of the profitability of that business. These are not core competencies of PHINMA. What is our core competency is roofing. So when we started with the roof of Union Galvo Steel, going into insulated panels, you can do that on the roof, but we can also move downwards from that roof. And to go back to an earlier action, when there's a gold rush and everyone is digging for gold, you can make a lot of money by supplying them the shovels. And that's what we're doing. We're providing the shovels. We're working with other conglomerates that we have good business relations with. We're able to get repeat buys from these customers. And once we bring in and complete the insulated panels factory, we should be improving our margins by more than 10% immediately, while still providing the same quality as imported panels from abroad. It'll also give us more control over our supply chain in that space.
Thanks, EJ. We received a question for education. Mr. Neto, you can take this one.
Sure.
What were the primary drivers behind the acquisition of Southeastern College?
Thanks. Well, one of the major considerations when we acquired this school is that we believe that this will provide us more access in southern Metro Manila, as well as in areas of Laguna and Cavite, where we intend to serve approximately about 80,000 students. Thank you.
Thanks, Ms. Net. And we have one for properties. Grace, if you're okay to take this one. So quite a lot of developers are also heading into the Bacolod space. What would differentiate Saludad from the other township developments currently being ongoing in the area?
Thanks, Kara. So Saludad Township leverages on the synergies among the PHINMA companies, which is why we're able to bring in a school, our Southwestern University, and a hotel, as mentioned by Kara, the Trip Hotel.
Thank you, Grace. So last call for any additional questions. So if there's none, we'd like to thank again everyone for taking time to join us this afternoon. We hope you have a pleasant rest of the day. And if you have any other questions, feel free to send an email to investorrelations@phinma.com.ph as you see on the screen. So thank you, everyone.
Thank
Thank
you.
you, everyone.
Thank you.
See you next quarter.